Hi friends, welcome to Crack Grade B. We are back with yet another very important lecture on the 300 one-liner for your examination. So this would be very quick and very important lecture when the exam is upcoming, right? So this lecture, we will cover 300 one-liner. This is the part 1, means in this particular lecture we will cover 100 and in a very quick short time we will bring another 200 in 2 lectures, right? So let's quickly begin with the first piece of one-liner. The Reserve Bank of India was established on, let me change the color. Okay, the Reserve Bank of India was established on April 1, 1935. Very important news. The Reserve Bank of India was established in according with the provision RBI Act 1934. But RBI, draw powers from Banking Regulation Act. Most of the power comes from Banking Regulation Act. Now, the central office of the RBI was initially at Calcutta, which is now Kolkata, but was permanently moved to Mumbai in 1937. Okay, so very important piece of news coming in. RBI was nationalized in 1949. Initially, it was privately held, right? It was privately owned. Total number of local boards in the RBI is 4. Mumbai, Kolkata, Chennai and New Delhi. Let's move to the next set. The nominated director of the RBI can be appointed for a term of 4 years. Can be reappointed one more time, can be reappointed for 8 maximum. So 8 maximum. Minimum is 4, right? So I will only mark the important keyword point. I will make it round so that you remember it. The term of the governor and deputy governor of RBI is 5 years. Eligible for reappointment by the union government, right? Now, National Institute of Bank Management is located at Pune. Okay, so we tend to miss all these things because this type of news doesn't come in current affairs. These are the very static part and you should know. Now, National Institute of Bank Management was established in the year 1969 by the RBI in consultation with the Government of India as an autonomous apex institution for research, training, education, consultancy in bank management. Okay, so Pune and 1969 is something you will have to remember. Indira Gandhi Institute of Development Research is located where? Is located in Mumbai. Was established in the year 1986. The Institute for Development and Research in Banking Technology is located where? Is located in Hyderabad. Okay, let's move forward. So this was established in the year March 1996 as an autonomous center for development and research in banking technology. Let's move to the next set. Now, Indian Financial Technology and Allied Service is located at where? Mumbai. Okay. This is a wholly owned subsidiary of Reserve Bank of India that designs, deploy and provide the essential IT related services and required by the RBI banks and financial institutions. So you can say that this is technology partner of the RBI, not partner, technology arm, because wholly owned subsidiary of Reserve Bank of India. Now, Bharatiya Reserve Bank Note Mudra Private Limited is located at Mysore, Karnataka, Salboni, West Bengal. The machinery at Mysore site has been supplied by, so all these things are not important, right? But where it is located? Mysore, Karnataka, Salboni, West Bengal. Okay. Now, Reserve Bank Information Technology Private Limited, REBIT, is located at where? Navi Mumbai. Has been set up by RBI to serve as an IT and cyber security needs and to improve the cyber resilience of the Indian banking system. Okay, look, this institute is tech arm. This institute is cyber specialist. Okay, there is a difference. Don't get confused. Now, DICGC was established under Deposit Insurance Act 1961. Okay, this came into force on January 1, 1962. Very, very important point. Each depositor in the bank is insured by DICGC up to a maximum of how much? 5 lakh rupees. Let's move forward and let's see the same piece of information further. All commercial banks, including branches of foreign bank function in India, local area bank, regional rural bank, cooperative banks are insured by DICGC. But NBFC are not insured by DICGC. Okay, very important piece of. So if you remember this, rest everything by logic you can answer, right? So the keyword is 1960, 1961, 1962 Jan 1. That's it. And NBFC is not covered and 5 lakh. So these are the keywords. Let's move forward with the next set. TLTRO stands for Targeted Long-Term Repo Operations. Okay, targeted long-term repo operation. So this is a very short lecture. We will not explain, but if you have been a constant, viewer of our YouTube channel, then there is a smile in your face and you already know what is target long-term repo operation, because in monetary policy video we have explained this, and there and this has been explained by multiple teachers as well. So I hope there is no doubt regarding TLTRO. ANBC stands for Adjusted Net Bank Credit, right? Sometimes they may ask you what is C in A and BC. Okay, so you will confuse. C stands for credit, C stands for consumer, many things. Okay, so they will give all the C related to the banking sector, and there is chance that you will get confused. C stands for central system as well, so many things. Now RBI has obligation to undertake the receipt and payment of the central, means RBI is the banker to the government, to carry out exchange, remittance, other banking operation, including management of public debt of the union, under which section 20 of the RBI Act 1934. Okay, and as per the section 21 of the same act, RBI has right to transact government business of the union in India. Now, state government transaction carried by RBI in terms of agreement entered into with the state government in terms of section 21A of the Act. Okay, means look, section 20 and section 21 is by default for the union government, but section 21A is not by default for the state government. It is as per the agreement between Reserve Bank and the state government. So there is a clear-cut differentiation between the functions laid down for the Union of India and the function laid down for the states of India, right? Now let's move forward. A bond is a debt instrument in which an investor loan money to an entity, typically corporate or government, which borrows the fund for a definite period at a variable or fixed interest rate. Okay, what is a bond? A bond is a debt instrument, right? See, it's basically, if you want to relate, you can relate it with a loan. The way you take loan from a bank, it's the same thing. Okay, now a government security, GSEC, is a tradable instrument issued by the central government or the state government. Okay, government security, GSEC. So what are the other names of GSECs? Please do mention it in the comment section. Meanwhile, we'll move to the next set. In India, the central government issue both what? Treasury bills and bonds or dated security, while the state government issue only bonds or dated security, which are called the state development loans. See, I'll tell you a difference between treasury bills and bonds. Dekho, if government want money, okay, it have two things. As per the statement while we are saying, we'll discuss only that, right? Treasury bill and bond. Now, when will government go towards treasury bill and when will government go towards bond? Let's say the government wants money for a short period of time, then treasury bill is the option. But let's say the government want for 10 years, money for 10 years, then treasury bill doesn't work, right? Then government has to go for bond. Okay, and state government do not have any arrangement like treasury bills. They have to go to bonds, which are known as state development loan. So I'll tell you one additional information. state development loans. Okay, so there are many mutual funds, asset management company, okay, which buy this type of loan and give mutual funds, right? So mutual funds, so indirectly we can also get this state development. Also we can get treasury bills and bonds, so let's not discuss that because I think you know it. State development loans, we do not hear it very frequently, and that's why I'm explaining. So G-Secs carry practically no risks of default and hence are called risk-free gilt-edged instrument. Okay, the last slide I asked you what is the other name. It's the gilt-edged bond, right? Because it's the government security, it's the sovereign guaranteed, there is no chance of default, right? Then treasury bills or T-bills, which are money market instrument, are short-term. Okay, the thing was already here. Short-term debt instrument issued by the government of India are presently issued in three tenors: 91 days, 180 days, and 364 days. Look, now what is the difference between a short-term and a long-term? Let's say from 0 day to 364 day, it's short-term. The moment 365 plus 365 or plus days, it's become long-term. Understood? That's the only difference. Let's say the government want money for 364 days, it will go with treasury bill. Let's say the government wants money for 365 days, there is no option for treasury bill, government have to go to bonds. So that's the difference. Okay, T-bills are available for a minimum amount of 25,000 and in multiple. But in case of retail direct investment, if you are following our current affair, I think day before yesterday there was a video in which we have explained the retail direct investment. The minimum for you and me is 10,000. We can invest by rupees 10,000 in the government bonds, right? Now CMB, cash management bill. So in 2010, Government of India in consultation with RBI introduced a new short-term instrument. So these are the new short-term. देखो एक short-term instrument already has, that is T-bills. Right now, in 2010, this is the keyword, CMB was introduced in consultation with the Union Government and Reserve Bank of India. Right, to meet the temporary mismatch in the cash flow of the Government of India, the CMB has the generic character of T-bill but are issued for a maturity less than 91 days. Look, treasury bills, the tenor cannot be 70 days, 60 days, 50 days, 30 days. It has to be either 91 days or 182 days or 364 days, right? But what if government want money for 30 days? What if government want money for 50 days? So in that case, it's the CMB that comes into the picture, and using CMB, the government can borrow money for 30 days, 50 days, 46 days, 75 days. Means CMB comes into the picture when government want money from 1 day to 90th day, right? The moment government want money for 91 day, government has to switch to treasury bill. Okay, that's the difference. Let's move forward with the next set of information. These are bonds on which the coupon rate is fixed for the entire life, that is till maturity of the bond, fixed rate bond. Okay, so fixed rate bonds are bonds. So basically, don't get too much complex. It's like the fixed deposit. तुमने एक fixed deposit किया, तुमको वो tenure के लिए उतना ही interest rate मिलेगा, that is known as fixed deposit or fixed rate bonds. Simple. Okay, most government bonds in India are issued at fixed rate bonds, right? Even if the government does it with the fixed rate bond, it plays an important role in the in the bond market, the bond yield. So that is another set of discussion which we will not bring here. Then these are securities which do not have a fixed coupon rate. Instead, it has a variable coupon rate which is reset at pre-announced interval set every 6 months or 1 year. These are known as floating rate bonds, right? Then capital index bond, what are these? These bonds, the principal of which is linked to an accepted index of inflation with a view to protecting the principal amount capital of the investor from inflation. These are called capital indexed bond. Then inflation indexed bond. So this bonds wherein both coupon flows and the principal amount are protected against inflation. So these are inflation indexed bond. Basically, it's like hedging the risk. Everyone, even the government hedge the risk, you know. So me and you are a very small player who would think कि कहाँ interest ज़्यादा मिल रहा है पैसा वहाँ डालो. Even the government thinks the same. So there are different categories of the bond. If you are for example, war is going in Ukraine. Let's say, or let us assume that war have started between Ukraine and Russia. Okay, this will eventually lead to inflation in the entire world. So now, if you want investment, you will, you will hedge your money in the inflation index bond because you want to leverage the instrument that is available. That's it. With this, let's move to the next one. A financial instrument or a type of bond which do not pay any interest or coupon rate but at issued at discount and redeem at par is called zero coupon bond. Now see, if you are someone new preparing, you will get confused reading this line. ये कैसा bond है जहाँ पे तुमको interest मिलता ही नहीं है, so why will people interest? No. So let's see, this is a bond, okay? उसपे 100 रुपए लिखा हुआ है, 100 rupees is inscribed on it, right? So government will say today is 2022, okay? So I will pay you same 100 rupees in 2000, let's say 32, means this is a 10-year bond. Now why will you interest? Why will you invest your 100 rupees now to get the same 100 rupees in 2032? Nobody will interest, right? But this is issued at discount. Government, they will tell, now you will have to pay just 90 rupees. So you are buying this at a discount price, okay? This is issued at discount and redeemed at par. मतलब जो लिखा हुआ है उस पे तुमको redemption मिलेगा at that particular date. Let's say 2032. आज तुमको ये 90 रुपए का मिल रहा है. Means तुमको 10 साल में 10 रुपए का profit होगा. Every year you are gaining a profit of 1 year. This is known as zero coupon bond, right? Let's move forward with the next next set of information. A high yield bond that is rated below investment grade is called junk bond. Okay, junk means kya? You know, junk food अच्छा नहीं है, it's not good for health. So in the same way, junk bond means which do not have that credibility. Okay, so if you are following news, you know that Future Group is defaulting the payments of the bond, right? Future Group is led by Kishore Biyani. They are, are not paying. So basically, what if tomorrow they comes out with a bond, their bond is rated D. I think CRISIL has rated D in the recent past, maybe in down 2-3 days. I have read somewhere, yes, have rated D. Okay, so let's say tomorrow they come out with a bond. So that type of bond will known as junk bond. Means वो मुझे particular ये होता है ना, let's say the bar, they do not hold that credibility. Okay, then this bond are riskier than other bond. Obviously these bonds are very riskier, but yes, they pay very good interest rate. They will issue, let's say 15%, 16% they will pay the interest. Or interest ke lalach mein people will invest. And what if they do not, default, they give the money, then people make huge profit out of it. Then STRIPS stands for separate trading of registered interest and principles of security. Okay, this is an abbreviation, nothing much to explain, and there is no option for you rather than to remembering it. Then these are unique instrument price of which are linked to commodity price via gold. Sovereign gold bond are also budgeted in lieu of marketed borrowing. Okay, sovereign gold bond. So what is sovereign gold bond? So basically it's a piece of paper, right? It's an asset backed by a physical thing, that is gold, backed by a commodity. Okay, then number 34, the maximum limit of sovereign gold bond subscription per fiscal for individual it's 4 kg, and for Hindu undivided family it's 4 kg and 20 kg for trust. right? So the maximum amount of money you can put in sovereign gold bond in a particular year is 4 kg. इसका मतलब तुम 4 kg सोना खरीद सकते हो. This is what it means by the way of sovereign gold bond. Now, these banks are required to maintain their entire SLR holdings in the government and other approved securities, that are regional rural banks. Very, very important, right? To maintain their entire SLR holdings in government and other approved securities. Now, GSEC are issued through auctioning conducted by RBI. Auction are conducted on the electronic platform called eCubed, right? Look, every banking system is connected by the core banking solution. सब बैंकों के पास अलग अलग, so there are different technology, right? Some of the technology being developed by Tata Consultancy Service, some of the technology developed by the Infosys, and some foreign banks have their own technology like Citibank, right? So they bring technology from America. Now even the standard chartered bank, I guess, they bring technology from America. But all this technology, is connected to a unified platform of the RBI, that is eCubed, right? So these auctions are conducted in the eCubed platform, and bank participated through that. Okay, and also the primary dealers who deals in government security are also a participant in the eCubed. Let's move forward. CBS stands for Core Banking Solution, which I just now told you. Okay, Core Banking Solution. OMO stands for Open Market Operations. Now, OMO are the market operation conducted by the RBI by way of sale purchase of GSECs to and from the market with an objective to adjust the rupee liquidity condition in the market on a durable basis. Absolutely clear? It's an arrangement. Let's say RBI wants to suck liquidity. It will by the no, let's say if they, okay, so that is a different set of discussion. We will not discuss that, most of you know it. Let's keep the lecture short. LAF stands for Liquidity Adjustment Facility. LAF stands for Liquidity Adjustment Facility, right? Let's move forward. It is a facility extended by RBI to the scheduled commercial bank, excluding RRB and PDs, to avail of liquidity in case of requirement of park excess fund with the RBI, in case of excess liquidity on an overnight basis against the collateral of GSECs, including SDLs or LF, right? What is SDL? Do mention it in the comment section. We have just seen it, right? Now, the LAF, as its name suggests, is a liquidity adjustment mechanism for the banking system. It is aimed to inject liquidity in the system when there occurs shortage simultaneously. So say liquidity adjustment facility, by the name itself, it's clear, okay? Let's say there is a shortage of liquidity in the market, the RBI will put money, okay, by the way of LAF, okay? So, and what is the opposite? Let's say there is excess liquidity in the market, the RBI will suck the liquidity from the market using the LAF. That's it. Now, the government security can be bought, sold in the secondary market either through this platform, negotiated dealing system order matching, or NSDOM is operated by CCIL on behalf of Reserve Bank of India. Even the retail direct investment, right? Retail direct scheme, if you have read it thoroughly, you know that NSDOM plays an important role there as well. Now, CCIL stands for Clearing Corporation of India. It provides guarantee, clearing and settlement function for transaction in money, government sector, foreign exchange and derivative market. Okay, so they play a very important role in in transaction of money, government security, foreign exchange and derivative market. Now, investors who have option of holding GSECs in dematerialized account with a depository NSDL or CSDL, right? So there are only two depositories in India, NSDL and CSDL. NSDL is being managed by NSE, CSDL by the Bombay Stock Exchange. That's it. OTC stands for over the counter. Now, let's move to the next article, next set of information. FBIL stands for Financial Benchmark India Private Limited. Now, when you have heard this word, I would like you to mention the recent current affair that you have read regarding FBIL, regarding, I'll tell you, LIBOR, MIBOR, okay? So do mention it in the comment section and try to recall. I am 100% sure if you are preparing for the examination, you have read it. But let's test your, memory if you could remember or not. So now, NPV stands for net present value of cash flow. Okay, present value of cash flow. Yield to maturity, YTM, is expected rate of return on bond if it is held until its maturity. Right? Now, FIMDA stands for Fixed Income Money Market and Derivative Association of India. Now, a repo contract where a third entity apart from the borrowing lender called a tri-party agent acts as an intermediary between the two parties to the repo to facilitate service like collateral selection, payment and settlement, custody and management during the life of a transaction. Now, tri-party repo dealing system TRIPS facilities borrowing and lending of funds in tri-party repo arrangement. CCIL is the central country counterparty to all trades from TRIPS and also perform the roles and responsibility of tri-party repo agents. Right? Let's move forward. Now, it is an unsecured money market instrument issued in the form of promissory note and held in dematerialized form through any of the depositories approved by a registered with SEBI. Okay, that is commercial paper. So companies including NBFCs, All India Financial Institutions, other entities like cooperative society, government entities, trust, limited liability partnership, and any other corporate body having presence in India can issue commercial papers, right? So a commercial paper is issued in minimum denomination of 5 lakh and multiple thereof and shall be issued at a discount to face value. Now, CP can be issued for maturity between 7 days and a maximum of 1 year from the date of issuance. So see, these are very, very important things. Please, 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 if you have to remember it, right? You have to remember it. Then certificate of deposit is a negotiated money market instrument and issued in dematerialized form as an promissory note for funding new. Obviously you will have that confusion. Please do mention it in the comment section. Believe me, we will help you out before the examination. Let's move forward with the next news article. Sorry, next piece of information. Bank can issue CD for maturities from 7 days to 1 year, whereas eligible financial institution can issue CDs for maturities up to 1 year to 3 years, right? Let's move to next set of article. The minimum amount for investing the certificate of deposit is 1 lakh. 1 lakh रुपए चाहिए. Okay. The document issued by the bank or financial institution at a request of a buyer, whereby the buyer or financial institution give assurance of payment to a seller if the terms and conditions specified in the document are called letter of credit. Okay, letter of credit, LOC. You remember the, I think, yes, the scam that is associated with Nirav Modi is regarding LOC and LOU. Okay, LOC and LOU. It's like, LOU and LOC, basically what is it? Let us understand. For example, okay, you and me are friends. Fine. Now I want money. Okay. I have asked you ki, give me 1000 rupees. I will give you in the next 10 days. You don't have money right now. So what you will do? You will take me to one of your best friend, right? And you will tell, okay, I guarantee you can give him 1000 rupees. So I got the 1000 rupees from your friend. Okay, 1000 rupees for your friend. Who is the guarantor? You are the guarantor. So you are the, you are the bank here, which issued letter of credit. Using that, I borrowed money from your friend. So this is a kind of arrangement, right? Exactly the, the example that I gave, you cannot correlate it 100% to here, but yes, the overall theme you can understand it. How does letter of credit works? Okay, so these are basically used in import and export, right? Import and export पे ये सब चीजें use होती हैं. Okay, how do we, I'll give you an example. Let's say I want to import some shoes from Vietnam, since Vietnam is the biggest leather, they have the biggest leather industry, okay, to sell in India. Now the trader sitting there will not give me in debt, right? So I'll go to my bank. So my bank will issue me a letter of credit. Okay, so that is a kind of guarantee. मतलब मैं उसको पैसा नहीं दे रहा हूँ, I am giving him a letter of credit. अभी in future if I do not pay, the bank has to honor that payment because bank has given guarantee कि ठीक है भैया ये नहीं देगा तो पैसा मैं दूंगा. So that is a terms and condition between me and my bank. Okay, which bank have given it to me and I have used it to purchase something from the foreign country, right? So that is a kind of arrangement. Now, on the other hand, letter of comfort is the guarantee provided by a bank to the foreign branch. Okay, letter of comfort. Don't get confused between letter of credit, or LOU or the LOC, letter of comfort. Let's not say a letter of comfort LOC because LOC is letter of credit. Now, electoral bond have a minimum value of rupees 1000. Electoral bond can be issued in a multiple of 1000, 10,000, 1 lakh and 10 lakh or rupees 1 crore. Validity of the electoral bond is 15 days. 15 दिन में पैसा नहीं मिला तो जाएगा वो पैसा. This is something, right? Now, a promissory note is an instrument in writing, not being a bank note or a currency note, containing an unconditional undertaking signed by the maker to pay a certain sum of money or to an order of a certain person to the bearer of the instrument. Okay, see, promissory note, simple, you can correlate with a check, right? But see, it's not a check, that's a different thing. But okay, let's not bring that example. Let's bring the same example. I want to borrow money from your friend, but you don't have time. Okay, you don't have time to physical meeting. So what you do, you will write a letter. You will, so it's not a let's not bring WhatsApp here. You will write a letter in a piece of paper and you will sign. This is my friend, you can give him rupees 1000 for 10 days. I take the guarantee and you will sign and you will give it to me, and I'll take that paper to your friend. Your friend will, okay, so my friend have guaranteed it, so he'll give me 1000 rupees. Whereas I don't know him personally, he doesn't know me personally. So that promissory note, okay, which is not a bank note or a currency note, which has an unconditional undertaking, उसने वो देखा पैसा दे दिया मेरे को, that's a promissory note. Okay, and the section related to A6, section 4, Negotiable Instrument Act 1881, promissory note. Negotiable Instrument Act 1881 came in force to in force in March 1, 1882. ठीक है, देखो चेक के पहले ये सब चलता था, because let's not talk about history. Okay, let's move forward. It is a written instrument containing an unconditional, okay, so it's already there. A bill of exchange, right? Section 5, Negotiable Instrument Act 1881, bill of exchange. So you can go through it. Then, what is a check? A check is a bill of exchange drawn on a specified banker, not expressed to be payable otherwise than on demand. It includes the electronic image of a truncated check and a check in the electronic form. Okay. So there are multiple ways to write a check which are not so important, but yes, you can certainly pause the video and go through it. That would be more than enough. Okay, what is bearer check, what is order check, what is cross check? So cross check, I hope you know, because some of the other way, once or twice in your life you have written, although who writes check as in person? So maybe in business transaction we do write, and this is one of the important instrument in business, but in personal day-to-day transaction we are no longer using it. Okay, UPI is easy, NEFT, IMPS, RTGS is the easy thing that we prefer. Now let's move forward with the next set of information. Okay, the paid up capital for the RBI is 5 crore rupees. Now move forward. Okay, something related to Reserve Bank of India. The Hilton Young Commission gave recommendation to set up the Reserve Bank of India. So which commission gave? It's the Hilton Young Commission. Now, who is the first RBI governor? It's the Sir Osborne Smith. Okay, he was the first Reserve Bank of India governor of non-independent India. First Indian RBI governor is Sir C.D. Deshmukh. Okay, C.D. Deshmukh. Reserve Bank continued to act as a central bank for Burma up to April 1947. After the partition of India, the Reserve Bank served as a central bank of Pakistan up to June 1948. So it's a long, history, glorified history, glory, the history that has a glory that Reserve Bank of India carries. Sir Bengal Ram Rao assumed office as the governor after the nationalization of RBI on 1st Jan 1949. Look, I can guarantee that you know this name, Sir Osborne Smith, C.D. Deshmukh, but you certainly don't know this name. And you never know, IBPS can ask you this information as well, because this is also an important name, right? Dr. Manmohan Singh has worked as RBI Governor, Finance Minister, and the Prime Minister of India. So this is additional information. Most of you may be knowing it. Then the minimum reserve system, which requires the RBI to keep a minimum reserve of 200 crore comprising foreign currency, gold coins, gold bullions, okay, minimum rupees 115 crore in the form of gold. The minimum reserve system is the currency issued system followed by the RBI at present. It is adopted in 1956. Okay, minimum reserve system adopted in 1956. 200 crore is the value, 115 crore in the form of gold. Let's move forward. Next, what is repo rate? So I think there is no need to discuss all this thing here. Just pause the video, go through it. If you have any confusion, you already know all these things from the monetary policy video. Let me skip this part to make the lecture short. Okay, so everything you know. Now, open market operation, MSS, MPC stand for Monetary Policy Committee. Okay, so let us start from here. The MPC constituted by the central government under the section 45ZB of the RBI Act 1934. Right now, the first such MPC was conducted on September 29, 2016. Okay, MPC was constituted based on the recommendation of which committee? It's Urjit R. Patel. So you see, many of you don't know that Monetary Policy Committee is something very, very new in the recent times from Urjit Patel. So when Urjit Patel was the deputy governor, and I think at that time the governor was Raghuramji Rajam, Dr. Raghuram Rajan. So at that time he have formed the committee under Deputy Governor Urjit R. Patel, and he have recommended that the MPC committee, right? And the one of the other fact is the moment he became governor, and he was the first governor of the when MPC was conducted for the first time. Now, let's move forward. Total monetary policy, total members in the MPC, it's 6, 4 from the RBI, 2 from the government of India, right? 2 from the government, and 4, one is governor, okay? Governor, the head or the chairman of the committee. The other one is, okay, the other one is deputy governors, who is handling the, who is heading the department of monetary policy. The third one is executive director, from a nominated person from the RBI, an officer. Okay, mostly it has been seen it is in the rank of executive director. Okay, and the rest of the 2 persons would be from the government. So MPC is required to meet at least 4 times in a year. So actually it's bi-monthly. हर 2 month में एक बार होता है. वो कुछ 6-7 तारीख को there will be a meeting, and 8-9 8-9 तारीख को they will come and tell them what has happened in the MPC. That's it. The quorum of the meeting MPC is 4. Minimum 4 member has to be present, including the governor. NDTL stands for net demand and time liability. ठीक है, ये हर 14 days में calculate होता है, means fortnightly calculated. Let's move forward. Section 45E of the RBI Act 1934 is related to disclosure of certain information prohibited. Okay, so you cannot go ahead and ask certain information from any bank, and that is protected under from RBI. So that is protected under 45E of the RBI Act 1934. Now, Section 58G RBI Act 1934 power of bank to impose fine. Who is that? Who is having that power? Reserve Bank of India. Section 42 RBI Act 1934, cash reserve of scheduled bank to be kept with the bank, that is CRR. So CRR is related to or is related to Section 42 of RBI Act 1934. Section 22 of the Banking Regulation Act. Look, most of the common things or the basic thing is being covered in the RBI Act. Okay. If you remove the Banking Regulation Act 1949, RBI don't have much power. Okay. RBI doesn't have much power to regulate bank. But if you include Banking Regulation Act 1934, RBI becomes so powerful. Okay, in terms of managing the financial system of the country, in terms of regulating the entire banking sector, and also the money market. Section 24 of the Banking Regulation Act 1934, maintenance of a percentage of assets, that is SLR. Let's move forward. Section 36A ACA, the Banking Regulation Act 1949, suppression of Board of Director in certain cases. Section 138, Negotiable Instrument Act 1881, dishonor of check for the insufficiency, etc. of fund in the account. Okay, this is related to Section 138. Section 7 of the Banking Regulation Act 1934, use of words bank, banker, banking, or the banking company is being prohibited. Let's say, okay, let's say you want to open a company for whatever. You can't use the name bank, banker, banking, or banking company. Okay. Irrespective if you are opening a company related to financial services, you can't use this name unless you are being given permission specifically from Reserve Bank of India. You can't use based on Section 7 of the Banking Regulation Act 1949. Okay. No frill accounts. You have been hearing this word, right? No frill account. है क्या? Is a basic banking account. Such account requires either nil minimum balance or very low minimum balance. Charges applicable such maintenance low. ये देखो आजकल कितने सारे एप्स है, कितने सारे बेसिक अकाउंट है where you don't have to keep any minimum deposit and you also get a free of cost rupee card, rupee debit card, right? So those are no frill accounts. Then BSBDA stands for Basic Savings Bank Deposit Account. Okay, let's move forward. Okay, so yeah, I have already told you this information. Let's move forward. Total credits in BSBDA account should not exceed 1 lakh rupees in a year. Minimum balance in the BSBDA account should not exceed 50,000 rupees at any time. Maximum balance. The total of debits by way of such cash withdrawal and transfer will not exceed 10,000 rupees in a month in BSBDA account. Okay, then business correspondents BCs are retail agents engaged by banks for providing banking services at location other than a bank branch or ATM. Now, business correspondence model was introduced in January 2006. Okay, so I hope this lecture was very helpful to you. We'll bring out the part 2 and part 3 very soon, not in terms of days, in hours we will bring out the video. We are working so fast on it. With this, we have come to the end of this lecture. We wish you very good luck from Team Grade B. Happy and thank you learning.